Good morning, everyone, and welcome to the European crossover webinar. And we've seen equities come off a bit here, actually from that this area that they had run up to, and we can go and take a look at that. But first, we'll take a quick look as to where some of the currencies stand at. And we did close, as I did in the analysis, we closed above that breakout area here at 2159. We've talked about the importance of that area. Remember when it challenged that area and it was repudiated? We've talked about acceptance previously and how it got repudiated. And once it got repudiated, we saw that strong follow through and we started coming right back. We did close above the breakout area, which was the 2159 yesterday, and that opened the door for us to rally. We actually have bias chart resistance is 2207, so we're right there right now. But obviously, we can certainly move higher at this point, but that's the initial resistance cable. We talked about that weekly level. We'll get to that later. Aussie dollar, also at a very key level here. And Kiwi still trading fairly strong up in here. We are seeing equities, as I said, they've kind of pared back a bit from here. Also, another key mover, look at copper. And I've been saying this since last week. I remember even mentioned it yesterday. I really wouldn't be trying to sell this thing until, or you're trying to take short stabs at it, until you get past that stimulus bill, because this thing just keeps going higher. And so it's just killing everybody that's just trying to sell it. It's just going in one direction. Every time someone thinks, oh, this is it. Oh, this is it. This is it. This is it. Until you get past that stimulus bill, there really isn't a reason to short this market. And actually, if you're looking from a price standpoint, there's no reason to go and short it. We can reach certain levels, where a market can exhaust itself. We're talking about what we've seen here with Aussie and Kiwi. We might be close to those levels, but certainly we've made those pushes higher. And just a quick look. Let's take a look also where we stand here on the 10-year. Wow, that pushed up pretty high. And gold, still weak. We'll take a look at equities. And we were looking for this market to move higher. It moved much higher. I mean, I thought it was going to rebound, but I didn't think it was going to rebound to that extent. And we did push. We were looking for the late in the day. I kept saying that eventually NASDAQ would want to challenge that 50%, which we did. We pushed a little bit higher. We almost came. I was looking for it to come up in here into this area here. We just about made it there. That point of control. We had a double point of control here. Actually, I actually was working on some stuff late. That's where the double point of control was at. You can see that right here. That's not the current price, obviously, but I had this push back. So there's those two double point of controls there, which I had for here. This is on the 2 hour. Then here we are on the 30-minute. We did see a good little reversal here. And then obviously some follow through pressing here. Actually gotten just below this 13,240, came down here close to this 13,209, not that far away from it. And take a look at the S&P, bit of a pullback also here. Bitcoin, same thing. I would have thought we would have pulled down here to this 42, but it did rally, but kind of stuck in this 51,000 area here. And look at the daily close in NASDAQ. You can see this strong move. This is way even stronger. I mean, I looked at, they were looking to try and get past this or hold this, get a close over that 13,225, and they did more than that. And they pressed it lower. We're coming back here. This is actually going to come back into this area, so there's probably some good little support right there. If you look at it from a daily. Low so far. Challenging back. We can take a look at how far. Mm, 3201 would be 38% back. So maybe we see that. And it's already fallen quite a bit. That would be, if you step in here, this would be key right there. And they've also have the 2-day VWAP, so at least you know. But that 3225, that's at daily close. So even though they overshoot a little bit, be looking probably for that to hold. 3212. Yeah, that actually would be some support right there. But here you get the 2-day VWAP. Pretty good little sell-off in here. And take a look. You see if volume starts to pull up a little bit, pick up a little bit here. Have those two there, so a little bit overdone though. I think we would try and make a little hold here. That's also that daily close too. I think we're a little bit overdone here. So with that, we'll go on and go over the news. So the Australian New Zealand dollars on high as yields commodities hit the roof. The Australian and New Zealand dollars climbed to multi-year peaks on Thursday as a global rush into reflation play swung commodity prices and bond yields sharply in their favor. The Aussie was enjoying the rarefied air of 79.60, having reached heights not yet visited since 2018. The next target is a psychological 80 cents. The Kiwi climbed to 74.30, clearing the 2018 levels reached not since August of 2017. Prices for Australia, the combination of buoyant commodity prices and decent export values means that the resource-related export receipts have been healthy. Prices are expected to remain elevated, and that will generate ongoing large trade surpluses, which will support the Aussie dollar. Miners have paid out bumper taxes and dividends in Australia, so turning US dollars earned into Aussie dollars. The Australian 10-year yield shot up 1.705 to the highest level since May of last year, and a jump of 29 basis points this week alone. Australian 10-year yields and the RBA stepped in on Thursday to buy 3 billion Aussies of 2023 and 2024 bonds. Its success dragging the 3-year yields off to 14 basis points from a high of 1.68. And New Zealand 10-year yields have rocketed 33 basis points. Dollar languishes near 3-year lows as the Fed stokes reflation bets. Safe haven US dollar languished near the 3-year lows versus riskier currencies on Thursday as it continued its dovish signals from the Federal Reserve. The greenback sank to new fresh lows against the Aussie and Canadian dollar. Fed Jerome Powell reiterated on Wednesday that the central bank wouldn't adjust policy until the economy is clearly improving and will look through any near-term spike in inflation. Powell made it very clear that the improvement in the economic outlook thus far will not instigate the Fed to tighten monetary policy. The punch bowl isn't going anywhere anytime soon, and the policy backdrop should remain supportive to risk assets for some time. Easy financial conditions and the promise of fiscal stimulus, accelerating COVID-19 vaccine rollouts, have driven money into what's known as the reflation trade. Commodity currencies have benefited from price pickup in global trade, and the dollar will probably weaken over time as economies pick up and the inflation gets more attention, said Bart Wakabayashi. So with that, we're going to move into the analysis. So the euro closed above the breakout level of 21.59 on Thursday. Immediate resistance will be 22.07 with support at 21.19. Obviously, we're just a bit above that right now. Onto the cable. So the cable reached the highest weekly level of 42, weekly close level of 42.41 since March of 2018. The bar chart, the bias chart resistance will remain 42.41 with support at 40.55. So no changes. And on to the Aussie dollar. The Aussie continues to ascend. Resistance will be a weekly close level of 79.94 from January of 2018, and support will be 78.76. Wow, it's taken out 80 cents. And support will be 78.76. On to the Kiwi. The Kiwi blew out stops on Wednesday. Resistance is a weekly close level of 74.35. Wow, we're above that. Despite the stop pop, the key will be if the pair can close above 74.35 by the end of the trading week. Support will be 73.43. Unbelievable. They just keep on rallying. I mean, they're just blowing everything away. And honestly, I don't get why people have been bullish the dollar. I really don't get it. If you look at price and the acceptance of price, it has not told you any reason why people would step in to buy the dollar. I honestly don't get it. I keep saying, a lot of people just say, just look at the technicals. Look at it as if it's accepting. If it accepts price at one price, you got to move to the next level. It accepts at this price, you got to move to the next level. Accepts at this price, you got to move to the next level. Until someone steps in the other start and starts pushing back. Think of it that you go to a car lot and they're selling this car and they go, or an auction. And just like the auction, they go, 783, 783. Do I hear 785, 785, 785? I hear 790. That's exactly what's happening. But people just keep on trying to say, I'm still going to sell it. Now, like I said, I'm just putting the levels now. They're above the 74.35, but I'm just putting that's where the resistance is. But, people just keep saying, well, it's, that's too high. I'll just sell it there. Well, until the market proves that it's going to be too high, then you don't want to do anything. Moving into the dollar CAD. Here's another dog. The dollar CAD has shifted into free fall mode. Support is now going to be 24.43 and resistance at 25.58. Someone might think 24.43, that's really low. Hey, you know what? Until it proves itself, and I did this analysis last night. Until it proves itself, why not 24.43? I mean, we kept holding here at the time before. Remember, I think it was 25.89. There was like a big deal, and I said, if we get closed before 28.589, that opens the door for us to go to 25.28. Well, we closed below that. So I'm like, the next level, 24.43. Prove it to me you can't get there. Prove it to me that you're going to find bidders. Until it is, why are you trying to buy this thing? Pace has been all over the place. The dollar peso fell further back on Wednesday to 20.34, closing at 20.37. Support on Thursday will be 20.33 and resistance at 20.52. Well, they're blasting past that, but we're just all over the place. This thing's been going up and down. So once again, I'm just keeping the support and bias chart support and resistance where I put it, and that's it. And that's where it's at. Thing is you get in this type of environment, you start pushing both sides fairly strong. So now moving on to the dollar yen. The dollar yen is all over the place. The pair rebounded on Wednesday to 6.14 before closing slightly above 5.75. Resistance on Thursday would be 6.29 with support at 5.55. We're back to the 6.14. I was almost going to leave it for that. I said, well, they may try and test the stop, so that's why I'm with 6.29. Now to the dog with fleas that some people seem to love, which I honestly do not see why. it's proven to you. Remember, I mean, like I said, it was nearly 3 months ago that I kept posting those submarine honking signs in the chat room. I think it was over a couple of days that it was just going to go lower. And if you look at this, and one of the reasons is even if you don't want to look at the technicals, I kept saying when the market would sell off, the dollar would rebound. Look at the sell-off we had yesterday and into the European session. And look, it didn't rally. I mean, it moved a little bit higher, but like I said the other day, it just came out of the basement. That's all it did. When I was saying here on this video, I said big whoop. It came out of the basement. And I said, get to 92 and then we'll be talking turkey. And look, it's been going down, down, down. The dollar index is mired at 90. Support remains 89.64 with resistance at 90.42. That 90.42 is probably being quite generous, to be quite honest with you. So that's going to stay the same. And so to go back to what I was talking about, and we discussed it before, is you remember when we were going up here? This was, what was it, week and a half ago, maybe a little bit longer. And at the time, this was the resistance here, this 21.59. We were trying to press up in here at that 21.31. And when we rallied up in here, the market repudiated it because the way you could tell is look how we closed. We were holding up really well here. We not only rallied up in here, they slammed the heck out of it. So when that was repudiated, you saw the follow through, and we saw some pretty good follow through. As we went back down here, the market ended up not falling down here. It kind of held its own. We're like, well, the jury's out. So we pushed back up in here, and we came close to 21.59 a couple of days ago, but we didn't close above it. Then you can see right here, we got above it, but we still couldn't take it out. And hence I said, well, that's the breakout area right here, 21.59. Even though our resistance, remember, had been 21.89, I think, for a couple of days, 21.89. So now you see here is they accepted it above 21.59. You accept it, so now you got to go higher. And then my level here is going to come in at right there, 22.07. We're a little bit above it. We'll see if we're close above it, but there you go. So it rallied up in here. It had the potential to move higher, and when it got above to that key level, they slapped the heck out of it, sent it all the way back down here. So of course, anyone who bought was stuck, and that opened the door. Anybody who was right was going to write it down, and that's where it pushed down to here. Then we started going back the other direction, and they start pressing against it. There's my stops. They're not going to take out 21.31. They get above it, but we still haven't broken out. We get finally the price close above 21.59, and then there you go, the follow through on the upside. So we'll go and move into the cross rates. Man, this thing is bananas. Look at that. 78.35. Look at the weekly level. There is a resistance right there, a closing resistance, which is above it. $79.03. So that's going to be a resistance. Support is going to be right there, 78.30. God, they're just blowing through these numbers. It's crazy. Onto the euro pound. Well, we took this dip down here. You can see this level right there. That close would be support. right there, 85.29. And resistance, it's going to be that level right there, which is 86.38. On to the euro odd. We're even below 52.98 at the moment. I'm going to still say 52.98 until it proves itself wrong. It's below that, but I'm saying is that's a weekly level. So that's huge. So can it close below that? That'd be huge. You can see a couple of dips down here. That's 50. Well, it wanted to dip here. There is a low there before it took off of, okay, there, 52.52. Actually, it looks like that's what went to. So it'll be 52.52. That is a weekly level before this thing took off. So 52, resistance. Is there any resistance? Resistance had to be there. Actually, it'd be that high here, which would be 53.72. And Aussie yen, Euro Kiwi. God, it's amazing. This thing just keeps falling and falling and falling. That would be 62.93. They're just killing these people trying to buy this thing. Absolutely killing them. Look at this. This is a daily. It's just been completely obliterated. Resistance will be 64.07. I don't get some people just trying to keep on buy stuff that just keeps falling and falling and falling and try and sell stuff that keeps going higher and higher and higher. I don't get it. The Aussie yen disappeared. We're above that 84.50, not by a whole lot, but that's key right there. Can we push higher? The only rebound, this would be that close works with that high, which would be 84.84. Support is a joke. Because look, I mean, you just keep moving it up higher. Look how they blew through this thing. That would be support 83.84. That really wouldn't be, it'd actually be right there. 83.75. to the guppy. Psh. We're at that level still, which is 50.18. I think it was 50.18 we have for 50.17. So we'll stick with that. See if it can stay above it to finish the week. Support, that'll remain the same. 49.36. And lastly, the odd. Starting odd. Falling completely backwards. That would be support there. See, nope. This was key there, and it just closed right past that. So to find some kind of confluence, it has to be right there. $76.83. Resistance. For now, that may be a little bit too high. This would be where things turn around. So 77.63. And that'll do it here. That'll do it here. There's the bias chart. And my suggestion would be just pick a time frame that matches your threshold level or what the market appears to be responding to, and then just see whether or not it accepts price above or below. Because right now we're not trading in ranges. We're just blowing out levels above and below. So it makes no sense, we're trying to fade something. Ten-year yield still up here in the stars. Did pull back a little bit, but still pretty strong. Look at a 30-minute. Did pull back for that 143.5. Copper just remains on a tear. And with that, we'll call it a day and have a good day. And thanks. We'll see you in the chat room.